Good afternoon and welcome to NYFP. In midday trade on this Wednesday, we are seeing the major U.S. stock averages post a slight gain. Joining me now is Gregory Keating of Coffey Securities. Greg, good afternoon and thanks for joining me.
Afternoon, good to be here.
Well, Bernanke's testimony has been closely watched, but even before he began testifying on Capitol Hill, we did get the prepared remarks, so we've been analyzing those comments. But overall, we haven't seen anything new or of significance from that testimony. Now, we also got weaker than expected housing starts, so what do you make of those comments we got out from Bernanke and what we're seeing in terms of trading action?
Well, I think the important thing that you mentioned there is we didn't see anything different than the message that he's been delivering after his late June message there. So the market takes that as a positive. He sticks to the script. Nothing changes. It remains accommodative policy for the foreseeable future, as he mentioned. So that's why you're seeing the market get back to its winning ways after taking a break from an 8-day positive session in the S&P yesterday. The bad housing data, yeah, there was a little blip in the market there, but I think that just goes to show you how much weight that the Fed's chairman is carrying, and his testimony that started today, conclude tomorrow, will be to the market, I should say.
And Greg, we can't forget about the earnings reports. We continue to see better than expected results out from the financials, but we also should keep in mind that expectations have been eased back. We also got results out from some important tech names. We have more coming out after the closing bell today. But so far, what do you make of the season?
I think a lot of people have been talking about the financials, right? I mean, if there is going to be somewhat of a hedge to the rising interest rates, a lot of investors can look to banks, as that could be a positive thing for them. And we got today, Bank of America, good earnings report, stock is trading up. And then, days like yesterday where Goldman, it gave you a good earnings report, but the stock took a hit, possibly, the run-up going into the earnings, and then also the negative day yesterday. But I think financials definitely in focus, and I think that could be a sector that could be, positive for the rest of the year.
And as we head into the rest of the week, we get more economic data tomorrow, and as you mentioned, the Bernanke testimony before the Senate Banking Committee. But Friday, things will quiet down, and we have another summer Friday ahead of us. So heading into the next few trading sessions, what do you expect to see in terms of equity action?
I think a lot of what the Fed chairman mentioned, a lot of his actions is going to be data dependent. That's the term that they're throwing around now. And later on today, we get the Fed Beige Book coming out. Any type of progress report on our economy, any type of economic data, in particular with jobs and inflation, you were really going to pay attention to. So we really look towards that to see what the Fed is going to do and when that tapering that everyone seems to be talking about can begin.
And Greg, it is all about central banks, so we did get the BOE meeting minutes, and before the open we did see a little bit of downside pressure for the European equity markets, but those averages did recover as we headed into the New York session. Now, while we keep an eye on central banks, I do want to get your take on what we're seeing in crude oil prices. Now, we did see a run-up given geopolitical concerns as well as supply concerns, but I guess the question is how this translates in terms of gas prices, the recent inflation data, as well as retail sales. We've been seeing how gas prices have been translating into how consumers spend. So how concerned are you?
Yeah, that's a major concern, right? I mean, you saw that jump in the CPI number that we got, and that's a major concern because that's less money in the consumer pocket, and we need the consumers to drive this economy. When you're talking about the 1.8% growth that we got in the GDP for the first quarter, and we're looking to expand on that, it's going to be tougher if the American consumer has less money to spend on those goods.
Okay, Greg, well, thank you so much for joining me in midweek trade and midday trade, and thanks for your analysis.
You got it. Thank you.